Ladies and gentlemen, good evening. Good evening across the world to traders and investors alike. Let's kick it off with the disclaimer. Investing and trading in the financial markets pose substantial risks where one can lose all or more than their initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. Alright. I'm going to try to be more of as a professional and keep this video under 15 minutes if I could, or at least close as close as possible to it. Alright, this video is just gonna talk about the E-minis, S&P 500, and pretty much nothing else. I feel like this is we're at an important juncture that will I guess give us credence into what's going to happen next. Alright, what you see in front of you is a daily chart. I have some pivots. I guess you can see them, 2134, 2122, blah blah blah. Not that they're pivots. Not talking about the person's pivots or so on and so forth. These are substantial highs and lows within a leg of a trend. Right? If that makes any sense. They're just substantial highs and lows. Alright? Obviously, 2134 being all-time high. 22 is the secondary high. We also, what started it, the only way you could have seen this, the other pivots I have here, was on a 15-minute chart. It's when we had broke, I guess, the extension going up. We had a measured move, and we went from there. We went highs to highs extension, and that failed. And this was one of the first anchors, the first lows that were made before like a little bounce. And it was just a low that we marked off. It was 2108.25s, the 2100.75s, and 2099s. Right? Actually, the 2100.75s was the high bounce before the gap down. All right. The 54s, it wasn't the low of this day, but it was the low of that gap down before we had retraced somewhat. So 54s and 34 quarters, which was the low so far that was made in July. Alright, so those levels I have marked off. I'm not going to go too far back into it. We're just going to talk with or talk about the level that succeeded here, what levels we were working off of. Alright, so this is best seen in the 15-minute chart. I'm going to try to use the daily more, but it's best seen here on the 15. We was originally using these 2175s. This was the only level that after this shenanigans, it was the only level that we could draw from to I guess to participate in the market. At least the trend that shown itself was pretty much down. And we was drawing 2175s. Alright, that gave us our first short, and that never completed its profit target till well into these 34s. Alright, but just to show you, we had one. Let's just snap it so you can see. We had one, we had even two, a slight shakeout with dip into another tick, a few ticks up into that high, another gap down into new lows, which completed its profit target. So from there, we had erased this one, and we still use the 2100s to new lows. Alright, this was our first clue on this Monday that this trend was, at least the downtrend for the most part, was subsiding. There was a lot more consolidation to be had, and if anything, once that broke, you sort of knew we was likely to retrace a lot higher, at least into this area, using one of the more substantial pivots, the 34s or the 22s. Alright, so once this had broke, mind you, I just want to draw this one time so at least you have in the back of your mind of what is support right now. At the moment, we have support. We're not going to talk about the highs to highs extension from 2008 to highs. We're talking about December's 2014's lows, which is right in here. Excuse me, wrong one. December's lows right over here. Let's expand this. All right, 2134s to highs, 2134s. Let's just get it just about there. Oh, look, perfect, 2134. All right, so this shows you where support is at, and we have traded this support and held consistently. All right, and to be objective, I do find that for me to even try to take a short, that is alarming. All right, for shorts to hold, that needs to break. All right, and that does, again, I said this in a past video, that has targets up at the 2174s. That implies new highs. All right, if we break a short setup into this week, if we break this overhead resistance, we will. If we hold support, if we continue to hold pullbacks, if buyers do defend pullbacks, we will make our way up into the 2174s. There is no disputing that. So I do want to be objective and make it clear that there is a long below, and it has traded on multiple occasions. Defended throughout the volatility, it has defended, and there is no denying that. Alright, so that's just on a side note. I sort of lost track where I was at. If I have to, I'll edit the video if I have to. I don't like doing it, but I'll edit. Alright. Once this had broke these 2100s, again, we completed a profit target. We dragged it down, same anchor to new lows. Alright, that broke that Monday. Alright, what had happened? We came back down, we splashed down, and we traded that support. The support that I just had showed you. So this shows you the story that this chart is building. It broke a short, and then immediately it was a nasty sell-off, but we came down and we traded the long on multiple occasions. All right, this Friday low was the first time ever we came down, we made a higher low, and the gap down on Sunday night, this Globex night, came down and traded a halfway back long. Again, a series, a next measured move from Thursday's lows to Friday's highs. We came down, we made Globex lows, we held to the tick, we held, and we ripped. We went right through targets, and we blew through targets at that. So now, once you blow through targets, you know you're starting an extension. This is where things get very, very sort of easy to look at. So let's just zoom out real quick. We're using these highs, Friday's highs, two highs that blew out the extension, Friday's highs, two highs, bam, traded support once, 6 a.m. what you call in the morning, I was getting short on 86, 87s, and no, I did not book it. I'm holding it. It sounds real stupid, doesn't it? Alright, but anyways, that's we're not going to talk about my positions. We're just going to talk about what is happening. Alright, we came down, traded. We went to target. Next anchor. Alright, you can say that I'm not sure whether to draw from here or here. Alright, in all honesty, I do not know. Alright, because I would like to see if we drew to this high, to the 10 o'clock, 11 o'clock high. Alright, you can see that we did not trade support, but yet we went to target. All right, I'm gonna leave this up because this is substantial. If anything, I'm just gonna hide it and I'll just re-enable it. But let's just hide it for the minute, for right now, for the next minute or two. All right, I don't want this to cloud your judgment. All right, this is where things get iffy. All right, this morning and pretty much all throughout last week, what I was doing, I was giving this level as resistance. All right, and has been how I have gotten shaken out of my position many times. It's pretty much you get slapped in the face and the position will run the correct way after it's taken you out your stop. How this has happened is because I'm measuring from 2134. I'm using the most conservative stop, meaning that if this stop gets taken out, you know you are wrong. You're dead wrong. You should not be short. All right. So I was using 2134s, and I still was until this morning. 2134 two lows to the 2034 quarters, and that gives you roughly a line in the sand at the 2096s. All right, we are very close, ticks away from taking that out. Mind you, this is why I was selling 85s, 86. I sold 87s, and that's what I sold. And pretty much from there, I stopped. I seen what kind of dumbness I was getting into. All right, so this is one level, and that is correct. But mind you, remember how funny this had looked when we was drawing from these 2100, excuse me, 2108 25s to lows. This completed a profit target. All right, this completed a profit target before pulling in. All right, so there was really no way to how can I say it? This support once it had, excuse me, this resistance once it had broke. All right, we drew one, all those traded, went to target on this big candle right here on the 7/6 candle, July 6 candle. So we redrew it to lows, and this level broke that next day. So from there, you have to take the most conservative from highs from the 2134s to the first level that this big gap down happened, the level that we had drawn to before the bounce, these 2054s. You can use the 2054s or the low of that candle. You can use either or. Alright, I would honestly, I personally, I'm using the 2054s. That is a wide stop. A wide stop from, at least from my entry. Alright. We're not talking about me. However, just to say, this evening, tonight, the session that just passed, this Monday session, you never miss nothing on a Monday, is trading this daily short. And its first target is again a double bottom at the 2034s. What I am thinking, this is just an opinion, if this holds, we're not going to back and fill anymore from here. We take out 2034s, we complete the target. I believe we're just going to run straight down in extensions. And the first target that I believe this setup is really aiming for is to take out this one. These December's lows to highs. It's not much lower, and I already drew it by accident. It's not much lower than what the profit target on the short is. Right? It's not much lower. It's a few points down. 10 points, no, not even, 8 points tops. Alright, from these lows, December lows to 2134s. Alright, that's your support. This is, I believe, what we're aiming to break. I mean, it's very possible we can break this setup. We can come crashing down through it. And then immediately after breaking it, then you'll come back one more time to really to whip a lot of people out. 2134s to whatever low that breaks it, and then we can come back up one more time and halfway back. Alright, so that would pretty much bring us back into the 2060, 2070 area. Right now we're trading this daily short. That's why I said this is I think this is very important. All right, we're a few points away from knowing what's about to happen. All right, and this is why. How do you know that this is valid? Wait for the series to break. Remember this setup that we just had erased? All right, let's show everything. This setup right here. You wait for us to come down. I mean, you can draw it one more way, and let's just show you which way I'm talking about. It's from the highs, that same high, too high. Alright, so that brings it up another point or two. Alright, and let's get that exact. That brings you up to the 2082 halves. So the original that I told you, I don't know which way it's being drawn from. If it's from high to this high or this high. Alright, so that gives you the most conservative 81. We start printing on the 81 evens, resistance is confirmed. And that's when it's time to get aggressive and pay attention. And that would have been the shoulda, woulda, coulda trade of the day. As far as you just wait for the short to, the long, or any kind of in its series to break before you take a short. Yeah, you won't get top, but I'm over here trying to get top here just to show you. I'm trying to top ticket, bottom ticket, whatever you want to call it. You're trying to pick a top, and it's very dangerous. So I was taking this short with that much risk, and look what it has become. All right. Again, you can draw it a few ways. All right. Let's just do it one more time. All right. You can draw yes, you can draw from 2134s to lows, but again, that's gonna break above 2096. All right, 2096, you stopped. So 2134s to either 2054 or to the bottom of this red candle. The bottom of this red candle, which is the June 29th. All right, it's either or. That will keep you. Do the math. It's that much risk to the closest you're ever gonna come to picking a top in this market. Trade them safe.